Welcome to today's Coffee with Carrie. We are going to talk today about the younger home buyer and what that really means to mortgage companies. So, when I used to be in the mortgage business, we heard first time home buyer, everybody kind of cringed. It wasn't the highly competitive loan that everybody wanted. Everybody dreamed of jumbo loans and, big cash out refis. And that's changed a little bit. And why has that changed? The average home buyer age right now is 36 years old. And that demographic means that those millennials that nobody wants to talk about are buying the majority of the homes right now. That's on the cusp of millennial Gen X, and that's really changing the expectations for the mortgage. 64% of people buying a home are talking to 2+ lenders, and a good chunk of that are talking to 3+ lenders. So, how in this age of digital mortgages and people shopping rates and using calculators online, and most people are getting a pre-qual up front. So, how do you establish yourself as a loan officer, as a mortgage company, whether you work for a big bank, whether you work for a credit union, community bank, or a non-depository lender? How do you differentiate yourself? Well, a couple of things. The days of going in to your bank and sitting down and talking to a loan officer, those have changed. Banks and lenders are now centralized, and those loan originators, processors, underwriters are all centralized as well. So you don't have that loyalty of that face-to-face relationship anymore. So how do you make yourself stand out? How do you create the competitive advantage? That younger demographic still wants that face-to-face. And you can't do that face-to-face being remotely. So what video banking for the mortgage industry does is really make that loan officer be a video mortgage advisor. And being a video mortgage advisor, especially to this 36 and under demographic who's buying the majority of the homes right now, is they're spooked on this mortgage process. It's their first time. They need a lot of hand holding. They need high touch customer experience. Video banking allows that high touch customer experience because it takes the competitive advantage out of it. Most people go with the first company that they talk to that gives them the pre-qual that they feel comfortable with. And if you're that first company that can get to them the fastest through video banking, and you can create that one-to-one relationship with them, they're less likely to go with somebody else over a small fraction of a point on rate. Video banking allows you to see the mannerisms, the emotions. It allows you to even see the potential home that they're buying or they want to put on an offer with. And it builds that relationship because you know this person's going to buy another house probably in 3 to 5 years. And they're going to remember you through that video conversation, that memorable experience that you developed with them versus just a phone call. It's easy to jump ship when you've never seen somebody, you've never established a relationship with them, and you've just talked over the phone. It's very hard to jump ship when you've talked to somebody, you've had a video conversation with them, and then the next mortgage company you talk to is just over the phone. Where is your allegiance going to lie? You're going to go with somebody that you've built a relationship and built an experience with. If you want to learn more about how the digital mortgage and not to get left in the dust and how to use video banking to increase your close rates, we've got a cool webinar coming up on January 24th. You can go to our website to get more details. Thanks. This is your Coffee with Carrie.